Welcome to episode 797, Ron Barron, 10 Lessons. This is an outline of episode 797, lesson 1 to lesson 5. This is lesson 6 to lesson 10. Lesson 1, the best time to start a business is during a recession.
It's created in times of recession or depression, so that it would most likely be successful. Barron Capital. We started in 1982. Interest rates were 18%.
What about 2020? Lesson 2, buy and hold.
To invest for the long term, and when I'm talking about long term, the average holding that I have in my funds is about 6 or 7 years. So the average mutual fund turns over its portfolio every 6 or 7 months. Hedge funds are much shorter.
Lesson 3 is the small cap guru.
You're known as the small cap maven.
Well, small companies to us are companies that have market capitalizations of less than $2.5 billion. And what's unusual about our business is that we buy companies when they're small, when they're $2.5 billion.
Lesson 4, when to sell.
And most mutual funds turn over their portfolio every 8 months, and we turn over every 5 or 6 years on average. But we've owned companies for 10, 15, 20 years. So we've been an investor in Charles Schwab since 1992. We've been an investor in Robert Half since 1990, DeVry since 1990, Polo since 1999. So we bought them all when they're small, and when they get to 10 billion, we sell them.
Lesson 5, focus on competitive advantage.
We say all the time that we invest in people, not just buildings. And the idea behind that is that we're looking for businesses that have big growth opportunities. Other people look for those. We're looking for businesses that are appropriately financed. Other people look for that. We focus on competitive advantage. Few people do that. That means that something, a barrier to prevent other people from doing what you're doing, a brand, like Forbes.
Lesson 6, invest in good leaders to inspire followers.
And then we're trying to find someone, a leader, who is smart, hardworking, someone we trust, and someone who people will follow. You don't become successful in a business unless you inspire people. Treated appropriately, because if you don't treat people well, then they're not going to work hard for your business. Steve Wynn would like to say that the nicer he is to the people who work for him, the richer he becomes.
Lesson 7, he's the Eternal Optimist.
And the GDP in the country then was $800 billion. It's now $21 trillion. So it's gone up 23.5 times, stock market, the GDP. And the stock market was then 1,000, it's now 25,000, 26,000, it's up 25 times. And that's in 50 years. And that's a compound rate of growth of 6% a year, 6.5% a year. So if you go 6.5% a year for now to the next 50 years, and I think it's going to be faster, that's nominal, then what that means is that the Dow Jones in 50 years will be 500,000.
Lesson 8, his 2 biggest investment mistakes. Sotheby's, where he lost $250 million, and also not investing in Amazon.
Was in 1999, I would go visit Jeff Bezos to get him to purchase Sotheby's. So we bought Sotheby's at $20 a share, went to $40 a share because I thought you could take what they were doing to the internet. And I was trying to convince him that that was a good thing for him to own. He didn't buy that idea. And the chairman of the company was indicted for price fixing with Christie's, went to prison, and the stock went from $40 Sotheby's to $10 where he sold it. So he lost half of our money. And I always thought that was the biggest mistake I ever made. The biggest mistake I ever made was seeing Jeff Bezos for a year up close and personal and not investing in it. How could I miss that?
Lesson 9, how he navigates life. His plan A was to be a rich doctor. His plan B, to be a lawyer. His plan C, a stock analyst. In his high school yearbook, he stated his goal was to become a rich doctor. This is his plan B. He earned a law degree from George Washington University. Lesson 10, start old. He started Barron Capital at age 39. Thank you for watching. Please subscribe and leave your questions and comments below. Wishing everyone peace and prosperity.